Hey everybody, it's Mattie here with Altcoin Buzz with you on this Monday. Hope you're having a terrific start to your week. We're going to start things off with a short video this week. We're looking at a positive outlook that Rommel delivers us about 2019 and why the institutional investors may shape the crypto landscape in a positive way. We're going to take a look at just a brief tweet that's kind of like a reminder. We're going to ask you guys if it's something that's on your mind, something coming up. I can't say in the near future, but it is something to consider. But let's begin as always on altcoinbuzz.io with the news roundup NEWSFLASH. This was the news courtesy of Chris. So these are the most important stories you guys know by now of the last week or so that have really shaped the crypto landscape. First of all, we've identified the fact that the first crypto ETF exchange traded fund has been approved in Switzerland. And I think this is significant not because of the magnitude of the ETF itself. This is no VanEck, this is no SolidX, it's not on the CBOE, okay? However, a lot of people were saying that it could never be done. And of course, they were talking about the United States in that context. However, the fact that it has been done, even if on a smaller scale with these guys, the Autumn ETP, it's still something that, the Amoon ETP, it's still something that sets a precedent and other countries and other companies can look to. So that's number one. Check out the story if you've not already. Number two, Coinbase Custody announces support for Ripple's XRP and Omise Go. We took a look at some of the price action the other day. Ripple, for some reason, was affected more than Omise Go, even though it's got a much larger market cap. Number three, Galaxy Digital moves to tokenize the whole of real estate. So we looked at what Mike Novogratz was doing, and he seemed to be plucking people out of Wall Street, specifically Ian Taylor from Goldman Sachs, in order to, quote, tokenize the real estate market. So that's a good story with a lot of potential there. Take a look at it if you've not already. Of course, there's been some other news in way of the crash, the unfortunate retracement that we've seen, although we're still kind of, and let me know if you disagree, but we're still kind of trying to really pinpoint the cause of that. There seem to be a few different reasons. The Bitcoin Cash fork was definitely one of them. But let's now move on to more current and more positive news with this article by Rommel. 2019 might be the year institutional investors come in, but will it save Bitcoin? So 2018 has been a tough year for the cryptocurrency space. However, 2019 could bring in institutional investors and increase crypto sentiment. So not only has this year been difficult, but you have some experts, as Rommel points out across the world, who are calling for another 70% drop in the price of Bitcoin. Can you imagine? However, despite that, Rommel points out all the reasons that we ought to be optimistic, at least over the kind of medium to long-term future. So first of all, you have the launch of Bakkt. This is the New York Stock Exchange owners, right? The parent company of the New York Stock Exchange, ICE Intercontinental Exchange. They announced that they will launch a Bitcoin futures trading platform for institutional investors. This is a door that opens to individuals who want a safe and more secure way to invest in Bitcoin. This is scheduled to get underway soon, and we all know by now, to one degree or another, a little bit about the psychology of the herd, and that is why many people have coined this new interest as, quote, institutional FOMO. So whether you agree or you disagree with the direction that we're saying is a good one here with Bakkt, that's happening fairly soon, so keep an eye on that. It's coming up. Number two, as Rommel points out, Fidelity Investments, which manages around $7.2 trillion in client assets, officially has launched their, quote, Fidelity Digital Asset Services. The goal of this new company is to offer their clients a safe way to own cryptocurrencies and execute trading services effortlessly, but again, safely. The type of investors that fall under the Fidelity branch are hedge funds, family offices, and market intermediaries. So here's a quote from the head of digital assets, Tom Jessup. Quote, "We started exploring blockchain and digital assets several years ago, and those efforts have been successful in helping us understand and advance our thinking around cryptocurrencies." And then alluding back to what we started this video with, to tie it up in a neat little bow, you have the VanEck, which has partnered with the CBOE to create an ETF. We're still waiting on this, but I think if any ETF is going to be launched in the US, it's going to be this one. That's just my personal opinion. So for months, writes Rommel, people have been raving about ETFs being approved, but many of the ETFs proposed hold no ground and falter in one way or another. But the CBOE and VanEck ETF propose an actual physically backed Bitcoin ETF proposal. It will have a repository of Bitcoins. That's what makes it different from other companies who just offer derivatives. This proposal was recently postponed once again until December 29th, but that doesn't stop it from happening inevitably. The fear of missing out strikes again, and that is why they want to provide more legitimate ways for people to get involved with Bitcoin investments. So let us know if you agree with Rommel here. I personally do. There are a number of reasons to say, okay, maybe as short-term things don't look great, let's be honest, but between the VanEck, SolidX, ETF with the CBOE between Fidelity Investments and what they're planning. And of course, in my opinion, the most important, the launch of Bakkt by the Intercontinental Exchange. I think 2019 could potentially really bring in that big institutional money that will move things ahead significantly. If you're not up to speed with our previous reporting on Bakkt, check out this article by Chris from back in October of this year. We've also covered the big move by Fidelity. That goes as far back as June. You can read about Garrett's take on it here. Here's the link to that Business Wire piece where you can take a look at Tom Jessup. He's the head of digital assets over at Fidelity. He was interviewed and you get a better sense of his thoughts here. That's where we pulled the quote from. And finally today, just throwing this out really quickly, at Altcoin Buzz IO have asked, are you prepared for the halving? This is really not something that's been discussed, but people have to remember that this is there on the horizon. It's coming up. Stay calm and be ahead when the herd comes. For short-term trades, follow Crypto Old, that's _old, and Martin on Altcoin Buzz YouTube. So we're talking, of course, about our star analysts, Mark and Martin, always dollar average, of course. But we're bringing this up in response to this quote by non-dual Randy, who asks, Bitcoin halves in 551 days, which can mean one of two things. I guess he's not really asking anything there. He's stating something. So one of two things. Number one, you can spend your time being salty on Twitter for the next 2 years. Or number two, you can shut up and accumulate as much Bitcoin as possible. Your choice. So what do you guys think about the halving? I'm kind of leaning towards number two myself, but that's just my personal predisposition. Let us know what yours is. And of course, guys, be sure you're following Altcoin Buzz and Altcoin Buzz News. Follow us as well on Instagram, Facebook, and Telegram. Check out our last video here. Check out our website content. And it's Monday, guys, so I hope you have a great week. If you choose to invest, you have my blessing and you have all my positive karma. Smash that thumbs up, guys. And we hope to see you again soon in our next video. Take care.